Hey everyone, and welcome back to our usual chat that we have about the strategies in our portfolio that have performed the best over the last period. One of the coaches at Unga Academy here, and in this video, we're going to be taking a look at two strategies that have performed well in the gasoline market recently. But as always, before we get started, I'm sure you know by now, I invite you to please leave us a like, subscribe to our channel, and click on the notification bell to stay up to date on all our new videos that are coming up.
Hi, we are the Unga Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unga, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks.
As I mentioned a bit earlier, we're going to be talking about gasoline futures, the RBOB gasoline. Now, this is a very volatile commodity that has a big point value. So the value of 1 point, that is $42,000. In contrast, a single tick, you could say that these futures are very scalable but also very illiquid, is only worth $4.20. But with this product here, especially in certain hours, for example, during these phases, namely the night hours when it's nighttime in America, these products aren't traded much. So avoid trading during these hours. Indeed, you'll see that this strategy won't work during those hours, but instead we'll have a time window that will be activated from 8 a.m. and last until 12 o'clock. And in this time window, the strategy will try to buy at the highs or lows reached so far in the current session. The strategy will eventually close if a stop loss or take profit isn't reached, set at $1,200 and $2,500 respectively. The strategy closes at the end of the day anyway, so it is an intraday strategy. And you can find the strategy in the book, The Unga Method, which, by the way, costs nothing. You only have to pay for the shipping costs to get it to you, and it's worth it, trust me. I'm going to leave a link in the description below. And you see lately, this strategy is following what was, let's say, the trend also of the in-sample period. So definitely an excellent strategy that shows that it's doing very well over time and that it could, let's say, provide satisfaction in the future. And that's what we're all hoping for. The average trade stands at $116, and these are results already net of commissions and slippage. So we could say that the gross amount would be a little bit more. So let's go and take a look at how much we did pay for the commissions. So for a total net profit of $140,000, we paid $57,000, or let's say entered that amount for costs. So also a pretty pessimistic view, but not too far from reality because, as I said before, this is a very illiquid market and the risk of slippage is very high. All right, so let's move on to the next strategy, which is similar to the one that we have just seen, but unlike the first strategy we saw earlier, this strategy won't enter on the highs or lows of the current session, but will look for breakouts in a price channel, where we'll enter long in the upper channel and instead enter short, obviously on the lower channel. Now, this channel is built on the highs and lows of the last 180 bars. In this case, these are 5-minute bars, but if you prefer, you can use slightly wider bars, such as 15 or even 30 minutes. As I mentioned earlier, this is a trend-following strategy, and you'll close your positions at the end of the session. Specifically, we see the short side. If a take profit or possibly a stop loss doesn't occur, we can see it here. Here's the time exit. It closes at 12:30. While on the other hand, the long side, for example, we can see here the time exit, time LX, closes practically on the last bar of the session. And this is because the market is trying to follow the underlying behavior of this market, namely in the morning, in the overnight hours. There is a tendency to go down, while instead in the afternoon, there's a tendency to rebound. Of course, that doesn't mean that this will happen every single day. Indeed, there are also stop losses. But here we can say that the market respects these movements on average. In 2023, the strategy hasn't worked yet, but it only has just started a few days ago. And those are days, by the way, where the volatility and the volumes aren't very high. So we'll see what 2023 does have in store for us with this kind of strategy. So let's go through the report. We've considered the costs of the strategy, which are well over $82,000. That's because this is a strategy that trades more. I mean, you're looking at 1,665 trades since 2010, with an average trade actually similar to the previous strategy. Indeed, as I told you, they are pretty identical strategies. Now, this strategy is out of sample from 2017, so we could say from that period. And you can see that even in the post-development period, even though it's been, let's say, burdened by the costs that we would have incurred in applying these strategies to these markets, the system has remained in really good shape with peaks after peaks over time. So guys, go and give it a try as well. And with that, I do hope you enjoyed the video. Now, if anyone among you is interested in the world of systematic trading, I recommend you go and click on that link in the description of this video. From there, you can watch a free presentation by Andrea Unger. You can go and get our best-selling book, The Unger Method, which includes the strategy that you just saw. All you need to do is cover the shipping costs to get it to you, or even book a free call with a member of our team. And if you enjoyed this video, please remember to leave us a like, subscribe to our channel, and click on the notification bell so that you can stay up to date. And with that, we will see you soon in our next video. Bye-bye for now.